All right, what is going on? Welcome back to another video. This is day something. I think it's day 5 maybe, but this is about order blocks, and I'm hyped up about this because this is a fire ass concept and it's so easy, and you can implement it basically like a fair value gap, except it's like a 2 IQ version of fair value gaps, and it's so fire. And also, I know I haven't posted in 2 weeks, my bad again, but bro, let's just get into this because this is just going to be a quick and easy video, honestly, and it's going to be just as effective, if not more effective, than fair value gaps. So let's go ahead and hop on TradingView, and as you can see, I came a little bit prepared with some candles and stuff, but before I get there, let's look at the charts. What do we see? On the chart, we see consolidation followed by a big move up, or consolidation followed by a big move down. So obviously we already know about liquidity sweeps, and we know kind of how we can re-enter them through fair value gaps, but another method of re-entry of possibly retracing back into that fair value gap is an order block. And what that is an order block is simply the move that happened before the liquidity sweep. So as you can see right here, what is this? This is our liquidity sweep. But right before this big move down, we have this move up, right? We have a little consolidation and then it drops. Our order block is this move up. Damn, bro, I didn't mean to do both of them. Our order block is this move up right here before that pump down. And that's literally it. Obviously, now you're going to be saying, oh, bro, there's like order blocks all over the place. What about this right here? Oh, look, there's a move up before a move down. Oh, look, there's a move up before the move down. Oh, look, there's a move down before a move up. All order blocks. What are you talking about, bro? Stop yapping. And so it sounds stupidly simple. Oh, okay, it's a move before the liquidity sweep. And I'm going to explain a little bit as to why this is, and as to why price likes to retrace back into that zone first, before I kind of get into more technicalities of what actually is considered a valid order block. And so the reason why price likes to go back into that range where the order block was, where there was a move before the big liquidity sweep, is because if you think about it, whenever institutions place the liquidity sweep in the first place, the whole point of the liquidity sweep is for them to get liquidity to put their actual orders in. If they're doing a liquidity sweep to the downside, like we see here, right, we have this big move down. This liquidity sweep is put in place so that they can go long and later move price up if they want to. Like we see here, right here, price goes up. They're sweeping price below these lows, below lows right here, below lows right here, whatever it is, to take out people's stop losses. People going long, they're going to have stop losses here, they're going to get hit, and then they're going to end up selling back into the market for the big institutions to buy and then move price up. And so the whole thing about the order blocks is because it's the opposite kind of move, right? We're sweeping downs, and this order block is a bullish candle. That candle, this candle right here, is the candle that the institutions initiated that liquidity sweep on before the big move down, which means that whenever the institutions go to move price back up to take their take profits, let's say up here, whenever they take their take profits, they have to end up moving price back down to that range because they still have open orders right here. Whenever they're moving price up and taking profits up here, they're going into drawdown. They still have margins from this initial sweep here that they got a bunch of sell orders to move price down. They didn't close out those orders yet, so they need to move price back down here, back down to where they initially opened their orders at, sell them off, or if they're sell orders, they're gonna put them into buy orders at break even, and then continue their move up again more. And so if we see the institutions do a liquidity sweep, we know that the candle before that is going to have to be revisited because they need to close their orders at break even of where they initiated the liquidity sweep from. So that is where the power of the order block comes in. That is the zone of price where the institutions initiated their initial move down. And so if I mark out our little zone right here before our actual liquidity sweep, you can see as well that whenever I extend out price, you can see it enters it, revisits our little zone, and dumps before continuing the move up. And obviously there's more impactful order blocks than this one, but the whole point is that price likes to revisit and then continue in the direction. So this is a bearish order block, so price wants to revisit into that order block and then go back down. And so there's a few ways that you can validate order blocks, and the main ways that I'm going to be teaching you guys is, first of all, look for a liquidity sweep. I mean, they're all over the place. Let's go to this one right here, right? We have a big move down. Where's the candle right before the move down? The opposite kind of candle before the move down, the up candle, right here. First of all, does the liquidity sweep form an imbalance or a fair value gap? Imbalance, fair value gap, same thing. Does this sweep right here form a fair value gap from our candle that we're looking at? Yes, it does, right there. And then obviously as the sweep continues, we're forming more fair value gaps there, we're forming another one there. So we have fair value gaps, but the main one that we're looking for is our order block candle forming a fair value gap with the liquidity sweep. If it does, that's one confirmation out of 2 that we're looking for. The second confirmation is, are we making fractal highs or fractal lows? And a fractal high is simply, let me just switch the highlighter. A fractal high is simply asking, does our order block candle have a high surrounded by 2 lower highs? Is it the point? Is it the tip of the mountain kind of thing? Does our order block candle form the highest high, insinuating a break structure? Or if we're looking at a bullish order block, do we form a fractal low? Does our order block candle have a low surrounded by 2 higher lows, which we'll get to later? But as you can see here, you have a fractal high. This order block candle here is forming the highest high from the 2 candles that are next to it, meaning that 1, we have a fair value gap confirmed, and 2, we have a fractal high confirmed. This is a valid order block. Now, whenever we're going to mark out the order block, if we have a standalone up candle, like let's pretend that these 2 candles to the left of it were also downward candles, you would just mark out this whole candle and drag that box out. However, because we have multiple up candles nearby in a row without ever being broken up, you're going to take that whole chunk. All 3 of these up candles together are going to be your order block. You're going to go from the bottom wick to the top wick from the whole group, and then you're going to drag that out. And then the point of this is that whenever you drag this out, you're looking for price to revisit back into that order block. And as you can see, we drag it out a little bit and it doesn't fully revisit it before continuing to move down, right? You know, in a typical order block, you'd want to see price kind of maybe go up into here, tap it, and then continue to move down, because this is a bearish order block. So we're expecting the price to go back into it and continue to move down. As we keep looking, there are more order blocks to be identified. There's a second kind of order block, right? We have our first order block, which is the move before the liquidity sweep. We got that done. But in the middle of a liquidity sweep, if we see an interrupting candle like this, that is another order block. These kind of intermediate order blocks aren't subject to the same rules that we look for on our initial order block up here. If you see an interrupting order block like this one, basically we don't really care if it makes a fractal high or a fractal low, or even if it forms a fair value gap, we're still going to mark it out. So if you see this in the middle of a liquidity sweep, you can mark it out and you can extend it from the wicks. And what do we see here? Move down, taps into it, dumps, taps into it, dumps. So this one got respected. And the thing is too about these extreme ones, and this is what these are called, these ones like all the way at the tip of the top of the liquidity sweep, those are called the extreme order blocks. And honestly, those don't really get hit because of the fact that it's so high. Like price has to drop, right? It hits the liquidity sweep and then price has to reclaim it all the way back up to the very top, almost to the top, right? Like 70% of the liquidity sweep price has to climb back up to. And so a lot of the times you won't even see that, because normally it wants to just retrace back up to like the 50% level and then keep going down. So these are more rare for it to tap into, but obviously you can continue marking out more that you see. But I will say, whenever you do see them tap into these higher ones, it is more lucrative. Whenever you're going to enter a position with these order blocks right here, what you're looking for is, obviously, right, we're setting up a short position because liquidity was short. It was a move down. If you were to technically set up a position here, you would set up your short position. Stop loss would be above the order block. Take profit would be at whatever points of liquidity you want. Take profit could be down here below these lows. It could be down here below these lows. It could be down here below this low. Wherever you feel comfortable hitting that TP at, and then your stop loss would just be above the order block, like I said before. And then obviously, you know, let's say you're watching price, you see this come in, you see the rest of these candles kind of go down. You're like, okay, well, let me set up a higher probability entry right here, because of the fact that, you know, most of the time we're not going to be going up to these extreme order blocks. So we're going to set stop loss above the order block, and then obviously TP down here or TP down here, wherever you see fit. And once we see it dip in, our entry would be right here. Stop loss would be above here. Me personally, I would have set my TP, I would have went back and I would have been looking, and I would have been like, okay, well, here's points of liquidity here that we want to hit. So I probably would have put my TP like up here, but it's up to you. Let's identify more. We look for a liquidity sweep, zoom in. And actually, no, this time I'm going to try to look for a bullish order block. So basically what we're looking for is our move down before our move up. Here we go. What do we see right here? We see, right, first of all, do we have a liquidity sweep? Okay, yes, obviously we do. Price pumps up. Let's just pretend price stops here. What do we see? Move down before we move up. Let's start testing and making sure this is a valid order block. Number one, do we form a fair value gap from our order block candle with the liquidity sweep? Yes, we do. We have one right here. And also, because we have 2 order block candles, this one forms it, and this one forms it right here. There we go. So both of them form a fair value gap. Next, do we form fractal lows? As you can see right here, we form a fractal low here, and then our 2 lows nearby are higher than this low. So this is creating the point that I was talking about. This is the lowest low, break structure confirmed, fair value gap, fractal low confirmed. This is a valid order block. So let's go ahead and mark it out. We're going to start from the bottom wick, the very bottom wick of this one, and because we have 2 consecutive downward candles before our liquidity sweep, we're going to go from the bottom wick of that one to the top wick of that one, highest high to lowest low, and we're going to drag it out. Then what do we see here? We have this one right here that we can mark out because we're in the middle of an existing liquidity sweep, and then let's just say price continues to go out for a little bit. Drag this one out. This one, whatever, I mean, it taps into it, fills it a little bit, and we'll drag this one out. But as you can see, the second we tap into this one, and honestly, here's another thing about these order blocks is that you can really just go for the wicks. So you don't even have to drag it out all the way down here to the very bottom wicks. You can just kind of create this box around the top wicks of your order block. And same with this one, you could just create it like this if you wanted to. It's a little bit easier, you know, than having giant boxes. And in reality, you're mostly just going to see the price go into the wick. For this video, I'm going to be marking out the entirety of the candles just to make it easier for you guys. But as you can see, what happens, we tap into this one, price goes up. We test it a little bit more, and then price continues its move up. And so the way how you do this setup is that, okay, you set up your order block, you make sure it's valid. We enter, whenever we see price, enter back into the order block. So your entry would have been here, or it would have been on this tap, or maybe this tap, but I see price, go back into my extreme order block, I set up a long position, stop loss below, or out of the order block, take profit at existing points of liquidity. It could have been here, it could have been up here. Bro, it could have been all the way up here for who knows, bro. Like, if you really wanted to, bro, you could put it up here and that shit would have got hit. But as you can see, price taps into the order block and then continues its move up. So whenever you're looking for order blocks, in reality, this is what I do. I go from higher time frame to lower time frames. So first of all, like, I'd mark out a higher time frame, right? And this is how you're able to snipe this shit. So you go in your higher time frame. Maybe we can do the 1 hour or even the 4 hour. Let's just go on the 4 hour, right? We're looking at current price, or let me not go to current price. That's pretty dumb. But like, we're looking here, for example, 4 hour. We're looking. Okay, what is this? We have an order block within a trend. We'll extend that out. Price, it kind of already reclaims it, and as you can see, it works. I mean, we go into it and then we immediately end up we hit that wick and then end up pumping up off of it. How do you get your optimal entry off of this? As you can see, we do it again here. We enter the wick, pump up off of it. What we're going to do is we're on the 4 hour. We have our box marked. We go to the 15 minute. We look in. That's not it. That's our other one. So obviously on the 15 minute, there's a lot more noise, and this whole piece right here was our order block on the 4 hour, right? Our low and our high of our order block, and then this was that other 4 hour upward candle. So on the 15 minute, then we'd be looking for other confirmations for entry. For example, we'd start marking out our fair value gaps. We have one right here, and that gets entered in. We have another one here, another one right here, right? You can keep going. You can start marking out your confluences within confluences on your higher time frame. The thing is that whenever we see price enter and wick into this fair value gap, not only, first of all, we could have just entered off of the order block, but now we're seeing it enter off the order block and tap into the fair value gap. That's a lower time frame entry. Then, you know, you can even go lower, maybe to the 5 minute, and then get even more precise with your entry. 5 minute order block here, wicks into that as well. And so I know it just looks like I have a bunch of fucking boxes all over the place, and honestly, you don't really want it to look like this. You want it to be more clean, but I'm just highlighting like all this stuff so you guys can see. But you can stack in these confluences. You see it enter our 4 hour bullish order block, our 15 minute bullish fair value gap, and then our 5 minute bullish order block as well. Bro, what are you waiting for? That's an easy entry. Bullish on all 3 of these time frames. Snipe that entry, put it for a long, stop loss, and then obviously this is a pretty big stop loss to have on a 4 hour. Maybe you could lower it down to maybe your 5 or 15 minute, so we could put our stop loss below our 5 minute order block, for example. TP could be at any point of liquidity. It could be up here, it could be up here, it could be up here. Enter the trade, TP gets hit, and you're chilling. So that is how you do it. You want to scale back the time frames little by little, mark all your confluences, wait for them to line up, and then snipe that entry, get the perfect, optimal, pinpoint accurate entry, and you're golden. But yeah, that's basically it. I would do more examples, but I'm low-key about to get kicked out from this hoe. It's like hella late and they're trying to get me out. So this should be a pretty easy, not very difficult, not very technical video, and hopefully you guys learned something beneficial. And honestly, you just got to practice it, look at the charts, know what you're looking for, and apply these concepts. The main thing that you want to be doing is you want to be applying the 2 confirmations to making sure it's a valid order block. And then once you have that, all you're going to be looking for is that retracement back in. Whenever you see it, go down to lower time frame, look for more confirmations. If they align, boom, hit your entry, stop loss below the order block or stop loss below your lower time frame confirmation, TP all the way up at higher liquidity, and you're chilling. So Forex factory time, I got it right here. And honestly, we're looking like we're chilling on the 9th. We don't really have anything going on today, bro. Today we have some crazy stuff going on. I'm not gonna lie. FOMC meeting, earnings report came out, retail sales came out, unemployment came out, which is horrible. All this yellow folder news, I don't even know, bro. Credit just got shit on. So today was not a good day to trade. Hopefully you didn't trade. But apart from that, we're looking like we're chilling on Monday. We don't really have anything. CPI's on Wednesday. Everyone wants the full port CPI. Do what you want, bro. Get rinsed. But we got CPI on Wednesday, and then Thursday we have a red folder with a lot of yellow folders. Unemployment claims is pretty big, and then housing stats, build permits. I honestly don't know what building permits and housing starts are. You typically, even if you see red folder with a bunch of yellow folders, it's kind of sketchy. So I definitely wouldn't trade Wednesday for CPI unless you're looking to full port and be a degenerate. Thursday I'd say be a little careful, wait a little bit after that, and then Friday obviously we have we should have a follow up. Yeah, we have PCE on Friday. So and job openings at like 9 a.m. So Wednesday, Thursday, Friday, amazingly Wednesday and Friday I look out to be not trading for. But apart from that, it looks like we're chilling. And so yeah, I'm gonna end it here. And I know I said that this video would be over, I think, equilibrium, but order blocks supersede equilibrium, and then we're gonna go over equilibrium. So I think next video finally we're gonna be going over equilibrium. So without further ado, I'm gonna end it here, and I'll catch y'all later.